What's up, everyone, and welcome to the Long Game Podcast hosted by Thomas Kopelman and Jacob Turner. In each episode, you'll hear us break down financial topics that are relevant to you and your situation. Our goal is to help bring credible financial information to you in short, bite-sized episodes.
All opinions expressed on this show are for educational, informational, and entertainment purposes only. Nothing on the Long Game Podcast should be considered advice. Always consult with your team of professionals before making any decisions regarding your finances.
What's up, and welcome back, everyone, to another episode of the Long Game Podcast. I'm your co-host, Thomas Kopelman, here with me, Jacob Turner. And today we're going to talk a little bit about the best business retirement accounts. And we're really here going to focus on solo 401ks versus SEP IRAs. And I think the lens that we're thinking through is really like these solo businesses or solo businesses with a spouse. I think we can hit on towards the end, like, you know, if we had employees, it's pretty much go to a 401k in my mind. I think simple IRAs are pretty garbage. I think SEP IRAs are too limited. There's no employee side. And on top of that, like, you have to match the same for everybody, which becomes a really big problem. But we'll focus on these two. And then our next follow-up episode is going to go into deferred comp and cash balance plans, which are really like stacked on top of these to just lead to more deferral. So Jacob, just walk us through a little bit of like the difference between the two accounts at its core.
Yeah, well, before we even talk about the differences, let's talk about who ultimately is a good fit for these. And Thomas, I think you mentioned a great point, like the solopreneur, the person that's either husband and wife team, or it's just them in the business. But the other person that it can be good for, and you probably don't even think about yourself like this, but you fall into this bucket, is first and foremost, a lot of my athletes out there, right? Like, we make 1099 income, off the field income. This is a great tool for that off the field income. But secondarily, like, let's say you're a consulting and that's like a side gig for you and you're making 1099 income. You might not think about yourself as a solopreneur, but you are a solopreneur. And you can use these accounts to potentially defer tens of thousands of dollars in taxes that can make a huge difference for you down the road. So really
the one thing I want to hit on there too, though, is understand there's an insane amount of rules in this space. There's discrimination testing and 401ks and other accounts, but then there's also control group issues. And so, like, the example you used of like, hey, I have a W-2 job and I have side income, perfect example. But me, I don't qualify. My issue is that if you own more than 80% of a company, then you own another company that is more than 80%. They're basically considered a control group and they have to follow the same plan. So because I own 85% of Wall Street, I could not have a solo 401k on the other side. But if I owned 79% or less of Wall Street, then with my self-employment income, I could have a solo 401k. It's this really weird rule. Sometimes in certain states, if your spouse owns a business and then you do, that considers a control group, even though you're not involved. So like, this stuff gets complex. Ask an expert before you implement anything, because there is so many rules that, like, I literally ask experts every time because I'm like, just want to make sure that this last part is dialed up and right. And we didn't have any issues on affiliate groups, control groups, et cetera.
Well, I think that goes to a good point too, Thomas, that even before we make any contribution, whether it's a SEP IRA or whether it's a solo 401k, you need to understand, going back to like educating you as the consumer, that you need to understand what you're contributing to, what are the pros and cons to it, because every one of these accounts we talk about, as great as they are, solo 401k is a great account. SEP IRA can be a great account. They also have downsides to them, right? Like, you put some money in there, there's certain restrictions now that are on that money. Like, the government does not give us tax benefits without giving some restriction to it. So I think it just goes back to, you really need to understand what you're getting into with any of these accounts, control group issues obviously being one of them. But I think even at a smaller level, like understanding, okay, what am I planning on doing with this money today? Like, yes, I understand that I might get a tax benefit of it, but I think one of the biggest downsides, really, the differences between solo 401ks and SEP IRAs, and the way that I would love for us to kind of walk through this is, it's kind of ping pong back and forth between what are the differences that we see. And I think for me personally, like, I used a SEP IRA when I really should have been using a solo 401k early on. And really the biggest downside of me doing that was, because I put money into a SEP IRA, okay, I no longer could do a backdoor Roth IRA in that given year and it would be taxable, okay? So one thing that we've talked about in the past is, if we're doing backdoor Roth IRAs, you're making over a certain income threshold, you can't directly contribute to a Roth IRA, so you do a backdoor Roth IRA. You cannot do that based on the pro rata rule, and it cannot be a tax-free move if you have other money in an IRA account. A SEP IRA account counts for that. The solo 401k on the other side does not count for that. So I think, to me, that's one of the biggest issues, because it's a personal one that I had. And I think that's something that people often miss.
Yeah, and I don't think you did anything wrong because realistically, 5 to 10 years ago, everybody did SEPs. I think the average CPA still is the do a SEP IRA because one, it's typically really late in the year. A lot of
It's
times
easier.
you can't. It's easier because of there's less paperwork and compliance testing. So we'll go through all of that. But like at its base, the difference between SEP IRA and solo 401k, there's a few. One of them is that you have an employee side on the solo 401k. So for a solo 401k, as long as you have enough earned income, you can do 23,000 on the employee side, and then the employer side is either 25% of your W 2 wages if you're an S Corp, or it's 20% of business profits. If you're the SEP side, though, is very different. There's no employee side. So it's either 25% of W 2 wages or 20% of business profits. And this is a huge downside, right? So you have the person who makes, let's say, $150,000. On a solo 401k, you could do 23,000 and then you could do 25% of the 150. So that's 37. Yes, 3750. So you're just over 60,000. And then if you wanted to, you could do the mega backdoor Roth to get in all the way to the annual limit of 69,000. If we flip this to a SEP, you could just do 25% of the W 2 wages. So you could do 37,500. That is a really big difference. And to me, that like at the very base is the biggest reason why I would want to do a solo over a SEP is because mega backdoor, higher contribution limits, and the employee side, all of those are really impactful.
Yeah, you can contribute so much more money to a solo 401k. And one thing that I just want to dispel a little bit is although there are restrictions on solo 401ks, it has never been easier in the history of the world to set up a solo 401k and make contributions. We had, Carry is a company that helps people do just that one thing, right? There's other companies out there that specialize in just setting up these solo 401ks. So I think one thing I want people to hear is like, although Thomas and I are talking about some of these different nuances and differences, just because somebody says to set up a SEP IRA does not mean you should. And if they say it's easier, I'm not saying they're wrong, but in 2024, there's a lot easier ways for you now to set up a solo 401k. And much like you mentioned, Thomas, like that could be the difference between you contributing 25,000-ish to 69,000. And that, depending on what you're trying to accomplish, depending on what you want to do from a tax deferral standpoint, that can make a huge difference for your financial future.
I mean, it totally can. And when people say it's easier, the reason they say it's easier is because a SEP IRA just doesn't really require the same level of paperwork as a solo 401k does. So when you do a SEP, and I will note there are now Roth SEP IRAs. I actually don't know any of the custodians that have this yet, but I would assume by 2025, most custodians will have it. But you basically just set it up, put money in, good to go. With solo 401k, you basically have paperwork that's created to establish this plan. And then once you cross 250,000 in assets in the plan, you have to file form 5500 EZ every year. So if you're the regular person who sets this up at Fidelity, Vanguard, et cetera, they will do none of that for you. You'll go through, you'll do the paperwork. It is confusing, but you'll get that done. And then when you have this issue of crossing the asset level, you have to hire what's called a TPA, basically a third party administrator, who will do this for you. They'll fill out the form, they will submit it for you. And that's where people have the issue. But like you mentioned with Carry, that's a provider that you actually don't need the TPA because they will fill it out for you. You still have to go file it. But again, if you use a place like Fidelity, Vanguard, et cetera, a lot of them don't have Roth contributions anymore. And they definitely don't have the mega backdoor option. Again, you'd have to hire a TPA to do that. But overall, when there's providers like Carry or 401 Go, et cetera, that kind of build this all into one spot, it does make it quite a bit easier now.
Yeah, I think the other thing to think about too is like you mentioned TPAs. We talked about how there's pros and cons to each one of these accounts. As great as a solo 401k is, as simple as it's become in 2024, there are still steps involved with that. And sometimes those steps do cost additional money. Versus a lot of times a SEP IRA is essentially like you flip the light switch on, you open the account, you make the contribution, and you can do it really at the last minute. Versus a solo 401k, you need to have a little bit of planning behind it because the account needs to be open, the paperwork needs to be right before you do it. And this is where it goes back to like just a core foundational element of anything with personal finances. You can find the answer to everything personal finance related on Google. How you relate that back to your life is unique to you. And then planning for it in the future is like the ultimate pillar of it. Because much like we talked about in previous episodes, like things just get in the way of life, right? Like we aren't thinking about what contributions we should be making. But if you're going to make a solo 401k contribution as opposed to a SEP IRA contribution, there needs to be a little bit more pre-thought out planning typically than the SEP IRA the day before the tax deadline. And the CPA is like, you can make a $25,000 SEP IRA contribution. Do you want to do it?
Yeah. And before, solo 401ks used to have different deadlines until about last year. So this is again why SEP IRAs were so commonly told is they're like, hey, here's your tax bill. And they're like, well, what can I do to reduce my tax bill? And they're like, well, I mean, you could set up a SEP IRA and you could put $25,000 in and here's the impact. But now there's new rules where you don't have to have the solo 401k set up in the year in let's say 2024. You actually just need to have it set up by the time really the tax filing deadline. For S corporations, obviously that's March, but for the other ones, you really have all the way up until the extension happens.
Yeah, which I think is important to say, but I also think, you and I have both seen this where people, they're not thinking proactively about their taxes. They get the big tax bill and all they're thinking is like, what can I do to potentially reduce it? And it's like, oh, the quickest move, like let's just do a SEP IRA contribution. But then you don't take into account what we talked about earlier that like, oh, maybe that affects my backdoor Roth contributions in the future. You don't think about the fact that like, should this be a traditional contribution versus now they have Roth SEP IRA contributions? All those things come into play. And this is where I just think it goes back to really thinking proactively about your taxes. If you spend a few hours a year giving some good thought to what you want to do from a tax perspective and you want to do from a retirement account contribution, like you will be so far ahead of 95% of people. And that's the thing I think people miss. It's like they think that they have to do every little detail, right? You don't have to do every single thing, but if you could spend a couple hours thinking about, okay, should I be making a solo contribution versus a SEP? There's more types of advisors out there than ever. Like you can hire somebody on an hourly basis if you want to be doing all this on your own, and you can get answers to your questions in that way. We're like, hey, that could be a really valuable time that you spend doing that. But I think it's just so important to understand not only the nuances, the differences, but how it affects your personal situation before you decide which one of those accounts you want to contribute to.
Yeah. Yeah, I couldn't agree more. So I mean, this is probably a shorter topic than needed, but it seems like, the reason why we like solo 401ks better is higher contribution amounts with lower wages or lower profit, ability to do mega backdoor, employee side versus just employer side. And I do think that is impactful because if you think about a lot of the businesses where QBID is 20% of business profits, you can structure it to say, I'm only going to do this employee side and not have to take as much from the employer side versus the SEP. You're going to have to do all on that employer side, which could impact QBID. So, I mean, I think those are kind of the main reasons why we like it more. And I think really quickly, maybe what we hit on too is like, overall, I think I don't really like SEP IRAs. I don't think I've ever recommended a SEP IRA except for one instance. The one instance I did is situation where basically husband and wife both have W-2 salaries. They both max out their 401ks. And basically they might go back to another country where Roth accounts aren't treated the same as their plan. And so they were just going to defer more off this side business. And there really was no employee side and the business profits would be enough for them to max out. Other than that, I really haven't had very many instances where it makes sense. And so then this is where people say, well, what about when you have a few employees, right? And again, I don't really use SEPs for a few reasons. One of them is the same match to everybody. So if you make 100 and your next employee makes 80, you can't really put very much of yours in unless you want to also put a crazy amount or percentage of income of the other people. You do have the rules of like, hey, you can exclude them until they've worked X number of years. But even in those situations, 10 years ago, SEPs make sense. Today, there's so many good low cost 401k providers. You had a 401 Go guideline, all of these are like $50 a month and then like $7 a person. There's tax credits that come back to you, where oftentimes that makes sense because then you can do the 23,000 and you set up a safe harbor plan with 100% match to 3 or 100 to 3, 50 to 5, all of those options. But I basically go from solo 401k to regular 401k. And then, in between, I really don't ever use simples because pro rata rule is triggered, lower contribution limits. And then I don't really use SEPs because I feel like a 401k is still a better situation once you add employees.
Yeah, I think it's really hard to justify now. And really, this has been a shift, I would say, really over the last 3 years or so, shifting towards how much more common solo 401ks are. Like they weren't as common 10 years ago. There's a lot more providers now than ever. And I think to your point, the other thing that people miss is like, oh, well, what if I have employees? What should I do? And to your point, like there's so many great 401k providers out there. We use Guideline. We're not sponsored by them. They do a great job. It's very low cost. And it's a great option for our business to have that safe harbor plan.
Yeah. And what was I just going to say that you brought up? I mean, I think, the 10 years ago part of thing is really important because technology really has advanced to make all of these things so much easier, so much smoother, and so much better, right? And that's where like people are like, oh, well, SEP IRAs did make sense and it's great. Like I do agree that SEP IRAs definitely had a place before all of this, but now with all of these shifts, I think it really does change what starts to make sense. And I'm sure 5 years from now, that's also going to change. But I feel like we hit on this topic pretty well. Anything else that you feel like we need to add?
No, I think we covered it really well. Again, I just think it goes back to like a lot of the topics we talk about, there's no right or wrong answer here. You need to understand what you're trying to accomplish, understand the pros and cons of it. Because again, as great as Thomas and I both think solo 401ks are, there's still cons to it, right? And understanding, hey, do those cons really affect me in my situation or do the pros really outweigh the cons? And oftentimes I would say they probably do.
Yeah, and don't feel like you're stuck, right? I have a lot of clients who've done SEPs. They join me, and we're gonna roll it. We're gonna start a new 401k and roll it in. And again, we talked about beliefs here, right? Like I know people who are like, backdoor Roths are not worth it to me. It's only $7,000. Such a small amount of the things that we do. I don't really want to do them. I don't want to have to worry about Form 8606. I don't want to worry about any of this stuff. And in that situation, for that person, you could say, great. Well, then maybe we do just run with a SEP. If you're going to want to do pre-tax, it's just you and you don't care about backdoor Roths. Like that's not my belief. That's not what I would do. But I do think you're right. Like there is not some perfect answer, but solo 401ks are better, and we can just leave it at that.
Yeah,
Um,
agreed.
so, anyways, everybody, we really appreciate you listening. Please don't forget to rate and subscribe. And again, if you have any topics that you want us to talk about, we're doing 52 episodes a year. We'd love some ideas, but if not, we'll keep coming up with these. And so we'll see you back next week.